Welcome to the Montgomery Small Caps CEO series. Today, we have the pleasure of once again catching up with Paul House, CEO of mining tech company IMDEX. Stock ticker is IMD. Paul, always good to see you, and thanks for making the time to chat today.
Thanks for having me, Dom.
So perhaps a good place to start is the F21 result, Paul. Well done on delivering yet another very strong set of results, which materially beat expectations and led to really good broker forecast upgrades. The business has clearly recovered very strongly as restrictions have eased around the world, and we were particularly impressed with the fixed cost leverage coming through. Paul, it'd be great to hear a few words on the result, please.
Yeah, sure, Dom. Look, we are very pleased with the numbers and the operations both. And there's a couple of key points in particular. A revenue growth of 11% actual, which is 18% on a constant currency basis, recognizing that we had some pretty significant foreign exchange headwinds, is a very good result and outperforms what we saw in the rest of the market. And that's a key tenet of the IMDEX business, is that we will aim to outperform market performance. Similarly, our EBITDA up 39% and 50% on constant currency. That is that leverage that we were talking about. It's a pretty critical feature of the IMDEX business model and the progress that we've made on our digital transformation initiatives. And you're seeing that gross margin and EBITDA margin expansion, and pleased to see that continue as it has done over the last couple of reporting periods. But more importantly, I think the growth in the percentage of revenue that is being trafficked through our IMDEX Hub IQ platform at 30%, which is obviously outperforming our overall revenue growth. And the growth of meters being surveyed, which is a measure of activity or workflow, that at 60%, that's a sign that our customers are taking full advantage of the IMDEX Hub IQ features and embedding those new workflows into their operations. And that is where we can deliver real value to customers. And so those for us were probably the most pleasing numbers.
Right. And given the global nature of the business, Paul, it's probably worthwhile just quickly going around the grounds in terms of what activity levels you're seeing across the different regions.
Yeah, happy to. I think we called out in our presentation, there was a rig chart, a rig utilization chart. We're seeing very strong activity in Canada, US, and Australia in particular. There is strong desire across the world. So the resource companies that we speak to have all allocated increased budgets. They all have a very strong commitment to exploration spending and meters to be drilled in order to find and prove up reserves. Pleasingly, they all have targets, places where they do wish to go and prosecute that activity. And we're simply just saying that in those areas that are running at high rig utilization rates, we're bumping up against available rigs or supply chains or labor availability and labor mobility as being a sort of a combination of things that are impacting their ability to spend as fast as they would like to. I don't think that those constraints will deter in any way from the ultimate outcome. It is just the speed at which they get there might be flattened out. And frankly, I think ensuring that it's a smoother growth path is not a bad thing, and you'll find a much more stable execution as a result. Some of the other areas I think are all tracking back pretty well. South America, Africa, Europe, parts of Southeast Asia, though, are still fairly heavily constrained at this time. But once again, the intent of the resource companies and the drillers both there is very strong. And as you see those vaccination rates improve, restrictions ease, we fully expect the capital being deployed in those markets. You'll see a continued uptick in exploration activity.
Good stuff. And you've successfully delivered the Digital Transformation 1.0 program, and that provides a clear visibility over every tool around the world, which really allows your business to move tools to meet demand and respond to the changing market dynamics. And you've now called out Digital Transformation 2.0 as the next piece of work which you're going to focus on, and that's targeting fluids. Can you please outline what that involves and what you hope to achieve once that piece of work's complete?
Yeah, I'd be happy to. So Digital 1.0, as you pointed out, addressed our tool fleet. That capital efficiency that you referred to, so the tool visibility and our insight to be able to move tools to where they're needed most was one aspect, but the other was the operational efficiency or the administrative ease. So we used to take 45 minutes, 3 different systems, 28 steps to move a tool around. That's now one system, 8 steps and 1 or 2 minutes, and we can do it from anywhere where our staff are located. That's enormously efficient and gives us a lot of that EBITDA leverage that I think we referred to earlier. On the fluid side of the business, we have the same potential opportunity. The fluids that we have in stocking points and warehouses and agents and distributors around the world are beset by the same administrative burden and the same inventory management burden. And so we expect that this digital 2.0 means that we can elicit the same kind of efficiency on the inventory or capital side and also on the administrative ease side. All in all, making for a much better customer experience. And because we started that digital transformation, 3 or 4 years ago, and we have very strong runway, we're very confident in our ability to execute that. And you should expect to see continued margin improvement in our business as a result.
Right. And IMDEX has really transitioned from just fluids and tools into a real mining technology company, and we saw more of that last week when you announced the acquisition of the MinePortal software business from Data Cloud Technology, which is based in California. That looks to be a highly strategic bolt-on. Maybe could you run through the rationale for the deal?
Yeah, look, we love what those guys have built. It's a really it's a cloud native product. So where a lot of organizations are trying to shift their desktop-based products into the cloud, the MinePortal product itself was born in the cloud, so to speak, and it was designed to be able to ingest very large data sets, which is a feature of modern mining today as they become increasingly data rich. And it allows you to provide that data in a cloud-based environment to a very rich spatial density. So a lot of IMDEX products today originate data, either metadata from operating activities or rock measurement data from the sensing tools that we have. So the ability to present and overlay those in real time in a much more efficient visual manner and enable customers wherever they are in the world to see it, to collaborate with that data and make that next decision earlier than they otherwise would is very powerful. And so we're very happy to have that team on board. Wonderful group of guys spread around the world who've been toiling at this product sort of for 4 or 5 years, and a really great addition to the IMDEX team.
Well done on securing that deal. And so why don't we finish up with the outlook? Your comments around the outlook at the results were particularly bullish. In fact, you said industry fundamentals remain strong and the outlook is brighter than any time in recent history. We've touched on some of the shorter term industry supply constraints that might lengthen the cycle. But maybe you could just finish up on the outlook for the business the way you see it. Thanks.
Yeah, sure, Dom. I think the question is what is different within the underlying fundamentals today compared to, say, at the previous peak. And so as we sit today, global exploration expenditure is still less than half what it was back in 2012. And the question is, do we expect to get back to that peak or move beyond that previous high? And our view is that we will. There's a number of reasons for that. The principal one is our view around gold on one hand and decarbonisation second, and a view around bulk commodities is probably the third. But the growth in, or the trend towards decarbonisation and the growth in demand for battery metals, copper, cobalt, nickel, and lithium, mean that in areas like copper, we're going to consume more copper in the next 12 years than we have in the last 100 years. And the sheer need to prove up supply through exploration drilling and bringing those mines into production just to meet that demand and meet what we think is a irreversible trend around decarbonisation, paint a very positive picture in terms of that longer cycle. I think there was an article in the Thin Review even earlier this week quoting BDO saying that we are looking for a stronger for longer type of cycle in front of us, and any future downturn will be at a much higher point than it's ever been in the past. Just those alone and the commitments that we already hear from resource companies, we think paint a very strong picture for the industry.
Well, that was a great rundown and clearly lots of reasons to stay positive on the IMDEX story. Thanks for making the time to catch up and running through the business, and take care and chat soon. Thanks.
Thanks, Dom. Always a pleasure.